Hello, good evening. It's Adil Fazal here, market analyst at CFDs.com, bringing you a review of the European markets at the end of the day. Okay, end of the day, which is Thursday, the 17th of December 2015. Okay, please be sure to visit CFDs.com for your trading needs. You are eligible for a 25% bonus on all new trading accounts. Alternatively, please do visit the educational site where I post my charts, analysis, etc. www.cfds.education. Okay. Now let's try and sum up these European markets. Now the markets themselves finished off the highs. As you know, my mid-market or afternoon market update basically explained that the European indices were all more than 2 to 3% higher and eventually gave back a percentage towards the close. Now the US markets have certainly turned negative, given the fact that gold obviously has been hit quite hard. The Nasdaq obviously is the biggest the biggest sector that's weak at present. Okay, so certainly is very weak and showing some further signs of weakness. So this is again a cause for concern. Okay, understood. Okay, now let's try and decipher exactly what happened and what caused the risk-off scenario. Now mainly it was due to the Nasdaq. The Nasdaq really triggered off the selling. Bring up the chart of the Nasdaq now, and you can see that we certainly still remain under pressure. Now the Nasdaq came under pressure, namely. Well, first of all, you had the Nikkei, which I did explain in my mid-afternoon market update, and I expect a sell-off towards the close, and that's exactly what occurred. I'm back up to 49 points for the week now, so back in the green. Certainly good news. Okay, let's see if I can finish with 200 points after finishing with 400 points last week. So I need to work hard the next 36 hours. Okay, so basically you can see here, you have the Nasdaq obviously failing at the key resistance zone, which is around the 46.75 level, and you have the diagonal trendline resistance obviously coming into play as well, and the Nasdaq certainly flushed quite substantially. Now the sell-off was number one due to Apple report with regards to Apple earnings being potentially weak. You had this chap, Mr. Shkreli, his name is, who's been obviously arrested, and certainly is putting immense pressure on the biotech sector, given the fact that there's some ongoing fraud. Now let's just have a look at the news flow if I can find it correctly. The link or the reference, and I can reference this correctly, bear with me. Okay, here we go. So Shkreli used money from MSMB Healthcare to pay off debts at MSMB Capital, concealed lies to investors, say prosecutors. So that's not exactly a positive sign. So that certainly obviously exerted immense resistance and pressure on the Nasdaq, and the Nasdaq certainly fell. Now we did have weaker economic data as well from the US. We had weaker, just to confirm, Philly Fed data was certainly weak. US jobs data didn't exactly come out as rosy as expected, and that certainly questioned the theory of Yellen obviously raising rates if the economy is not strong enough to withstand them. Okay, so that certainly is a factor that certainly will come into play here, and that obviously caused the sell-off in the US markets. Okay, so the weaker euro obviously is helping to a large extent, and is putting in a potential base, especially for European equities, but US equities not as much. Okay, now let's bring up the actual European stocks, and let's have a look here on the daily chart. You can see a potential topping tail going in here on the actual daily chart at fib 50%, so certainly something to entertain. But given the fact that the euro is now currently at the 1.08 level, you are looking at a potential bull flag and looking to test the 3,380 to 3,400 level, given the fact that we've fallen quite substantially. Okay, so bear that in mind. European 350, again, you have held that horizontal resistance and certainly a pullback here. So again, this is all my arguments for a potential reversal. The DAX obviously has held that 50% resistance itself. Now the 60-minute chart still has higher highs and higher lows, so this pullback here certainly is a buying opportunity. Currently we're trading at around 10,730 level, and you are looking at potential retest of 10,800 and 10,900, which is a 200 MA, eventually the 11,000 level, given the fact that the euro is now trading at the 1.08 region, so bear that in mind. Now bringing up the chart of the CAC. Now the CAC certainly is the weakest of the bunch, currently trading around the 4670 region. Now bear in mind 4665 equals previous resistance equals support, so certainly take that into consideration, folks, when trading. We obviously broke out of that channel, and the market certainly has been weak ever since. But again, bear in mind 4660 to 4670 certainly is got solid support for the actual CAC, French CAC itself, so bear that in mind. Okay, so certainly a bullish argument when you get to that junction. Now the FTSE 100, again a topping tail, but resistance which is 50%, and that's mainly due to the fact that oil prices certainly have been under pressure. Now we are sub $35 again, so it's not exactly good news for the oil majors. Currently trading at 34 as we speak. Now obviously that's not a positive sign. We are retesting double bottom support at 34.50. We have subsequently bounced, I think, to $34.70, $35 now. So certainly some promising signs of a potential bottom here, and this may well be a double bottom in the oil sector itself. Gold, again, same scenario here, is bouncing off its double bottom support. If I bring up a 4-hour chart, I'll give you an insight. You can see there we're putting in a potential bottoming tail and bouncing. So again, this certainly needs to be observed as well. Okay, so double bottom on a 10-minute chart, certainly moving higher. Now I'm actually long the Euro stocks, and I'm actually long the Kiwi. The Kiwi I'm already plus 13, plus 14, so that's certainly going well off this double bottom on oil, and obviously gold itself as well. So commodities certainly getting a bounce here. Now in terms of the dollar index, let's bring up the chart, the dollar for you, give you an insight here. Dollar index now is back into resistance. That's one of the reasons why I've actually gone long the Kiwi, and I'm actually expecting a bounce, and the bounce is working well thus far. So the Kiwi, so the dollar index certainly back into resistance. You have an unfilled gap left behind as well. Bear that in mind. So that itself should help and inflate commodities, which in turn should help equities higher as well. So bear that in mind. Okay, folks. Now going back to the FTSE 100, given the fact that the dollar index is into resistance, that will obviously be bullish for the FTSE. Now the FTSE 100 did have strong gains today in terms of the led by mainly stronger economic data. Now we had stronger retail sales, stronger CVI data, and you still have this bull flag intact. So you are looking for consolidation here, and then potentially retesting the, or certainly thrusting higher, and looking to test that 200 MA at 6250. So certainly again, bullish scenario from that perspective. Okay, folks, I think that's a good market wrap. Before I do, actually, just before I go, I'll just bring up the chart, the S&P 500. As always, it's important to know this. Yes, we have held at fib 75%. Those of you that watch my videos will know why I explain that 75% is key level, and obviously we've failed ever since we got to that level. Bringing up the 60-minute chart of the S&P 500, you are now potentially coming back into support. Now the S&P itself, again, I mean, it's early days at the moment, but I am looking at a potential HNS here now. So we are obviously, after we get a bounce here, looking for a bounce, and then I'll have to reassess the situation. But for now, I'm certainly looking for a bounce, and then I'll have to reassess. You can clearly see on the 10-minute chart, left shoulder here, head's gone in, looking for a right shoulder. But I do expect this right shoulder to move higher though, given the fact that, like I've explained, dollar itself is into resistance, commodities are into support, and that should certainly help the S&P 500 move higher. Okay, now I think that's a market wrap now in regards to the European market. So watch out for the bull flags on the Euro stock specifically, given the fact that the Euro is now trading at 1.08, and that itself is a QE trade, and that should certainly inflate equities, especially European equities, higher. Okay, be sure to visit cfds.com for your trading needs, and good night.